All right, everybody, welcome back to Cashflow Chronicles. Hope everyone had a fantastic time off. I know I was relaxing, drinking Moss daiquiris and Moss pina coladas in Mexico. It was a good time. Chris, as always, it's great to be here with you. It is February 27th, 2024. We had RKLB earnings today. We had a few other things happen over the past week. Chris, I have to ask you, what's with the no hat today, my guy? Different.
I was running late, so I had to look for it, but I couldn't find it. So I just whatever. I just put on the regular hair and said, "Let's go." You know, the producer wife got me a nice cold drink in the meantime, so that's nice. But yeah,
There you go. There you go. It looks good, man. It looks good. You should you
yeah.
should uh you should try that more often. You know, you got a nice head of hair on you. But anyway,
No, man, I got
um,
my hat's lucky, bro. I love my lucky South Carolina hat.
dude, I mean, it's so far so good for you in the markets. All right. Well, like I said, February 27th, Nvidia is below 800. Dutch Bros holding up just below 30. Spy still hanging above 500. Palantir is creeping up after hours, close to 25. Google is not decimated, just below 140 bucks. Amazon hanging out about 175. Bitcoin is the biggest news over the weekend, 57,000. Oil is holding flat from last week. It's still at about 78 bucks. Natural gas, though, still below $170 per thousand cubic feet. I don't know what the heck is going on with natural gas. But, Mr. Patel, I don't know if this is the right time to ask, but many people are curious as to why you've been adding a little bit of extra capital into BPYPM. We've had some people in the Patreon ask. We've had some people. I don't know if that's a Patreon exclusive or if that is something that you want to just
No,
discuss today.
I'll quickly go over it really quickly, but I think that there is a nuanced video that we could do sometime in the future when we have a bit more time, where we can actually go through all the financials and everything together. The annual report is due to come out sometime like this week or next week. So I think just waiting on that a little bit will be good, because it'll be helpful to see what's going on. But basically, BPYPM is a preferred equity. Preferred equities are relatively safer than common equity. Primarily because of just how they're structured. They sit above the common equity, so there's some safety built into it. The yield on it is really attractive. And the thing is, with preferred equity, unlike dividend stocks, dividends can be cut. So the company, in order to save money, can say, you know what, we're not going to pay a dividend, or we're going to cut back on dividend 90%, which a lot of companies have. And especially in the commercial REIT sector, if you've been a buyer of VNO, which is Vornado, you can see they actually just stopped their dividend, and they're accumulating their dividend right now. So with these, you can't really do that. So if you look at the top, you see cumulative redeemable preferred units. Cumulative means that at the most, the company can just stop issuing interest payments. They haven't done that, and I don't think they're planning on doing that, because their cash flows are relatively strong. But eventually, when they do resume paying those interest payments, you would be first in line to start collecting them again. So that's one of the benefits of that. The only thing is, there are a lot more nuances to this. There's a lot less liquidity in the market compared to your traditional common equity. So that's something to keep in mind as well. So if you try to go out there and buy $100,000 worth of this, you're going to get screwed over. So don't do that. You know, you gotta not only know what you're buying, but you got to know how to execute it, and execute it in a way where you're not screwing yourself over. The other thing is, there is a redemption price. This thing is not going to go to $100. At the most, it's going to go to $26 or $25. Well, $25 is the the price at which it gets redeemed if they do redeem it. But sometimes they can trade above the redemption price, especially if the dividend is the interest payment is juicy enough to entice people to overpay. So as an example, like let's take the current treasury, it goes back down to zero. People will be looking for things like this that yield a 6.25% return in comparison. So eventually, I think this thing is going to get back to its $25 redemption price. It's going to be about 3 to 5 years, but in the meantime, you'll be collecting a nice yield on it. So since it's trading at below par, way below par, actually at 13, you're essentially getting 6.25 almost times 2, which means you're getting about a 12%, maybe 12.5% yield on the cumulative preferred shares, which in my opinion is a freaking great return. And when this thing does go back to being a little bit, more on the safer side with the recovery in commercial real estate, this thing can easily get back to $24, $25. So not only are you getting money on the capital appreciation for it going from 13 to 24, 25, but you're also collecting quarterly payments of about 3%. So if you think about it, every quarter you're getting 3%, where are you going to find that, right? This is where we also have to go back and look at Brookfield as a company, like Brookfield Property Partners, and say, okay, what does their debt stack look like? What benefits do they have? Because there are certain things about this company that really do separate it against other REITs that are out there. So yeah, like I said, this is a lot more complicated than just buying a stock and collecting dividends, and that's it. So this is not your average just buy a common equity REIT. So just
so to add some color to this one, yeah, I mean, Chris hit on a lot of the things. The reason why it's pertinent to bring up more along this lines this week is because the ex-dividend date is on Thursday. For those of you guys that are a little bit less familiar with the dividend aspect of things, the ex-dividend date is basically the date in which that stock no longer will give you the dividend for that particular quarter. So in this particular piece, and Chris, correct me if I'm saying anything wrong. You're covering your mouth like I'm screwing something up.
No, you're right.
In this particular piece, like Thursday, the 29th, is the ex-dividend date for this particular preferred share. So in this respect, if you don't own it at close of business tomorrow, you lose out. And this is a 3% dividend. So what Chris did a little bit, maybe he can go into that trade. Maybe he'll hold that one for the Patreon. But what we did in the public account, and we can show, is this morning I went in and I bought 25 shares, which is around $300 or so worth of BPYPM. And we're going to hold that throughout the week. And then hopefully by the time next week rolls around, we can decide whether or not we want to kind of close that out or what have you for the time being. But the thing that's pertinent that I also want to talk to people about is you might see this aggressive decline, but this coincides massively and probably in a very direct relationship or inverse relationship with the interest rate rises over the past, say, 18 to 24 months. So latter half of 2021 is when these interest rates really started to take off. And since then, you've kind of seen that this has been on kind of the decline up until about more recently when it's kind of flattened out. And that's when I think everybody started to chit chat a little bit about interest rate cuts. So
I mean, there's a little bit more to it than that also, Matt. But I'm sorry to interrupt, by the way. There's a little bit more to it than that. One of the things that these guys have some vulnerability is they have a crap ton of floating rate debt. Okay, so floating rate debt in this environment is bad because what that'll do is basically your interest charges will go sky high. The benefit that a lot of people don't really know about commercial real estate is that all the debt is non-recourse, right? So think of it this way. If you have a building, if you own a building and the tenancy is 95%, and so you're making great margins, you're collecting rent, everything is great. And then COVID happens and your rent rolls drop, to 70%. Now what happens is it's uneconomic for you because now those leases that are terminating, they're not renewing. And so now you're left with 70% occupancy, which means you're 30% vacant, which means that 30% are not generating you any money. So what happens now, the amount that you have to pay out to pay your mortgage is way more than what you're collecting, right? Add on top of that, interest rates being higher because you have floating rate debt, right? That's bad because now you're paying higher interest with less rent, which means that the value of the building can become uneconomic. And if the value of the building becomes uneconomic, it's not good to hold that asset, right? technically it's no longer an asset, it's a liability because it's draining capital. Now, you can hold it for a while, and then if the market recovers, you're fine. You're getting back to normal again. But there's another option. You can go to the bank and basically say, listen, we'll give you back the keys. Here you go. Non-recourse. That's what non-recourse loans are. The bank is just going to have to say, yes, we'll take it. Or they can negotiate with the creditor, which are the banks, and say, hey, listen, we've had a 3% mortgage the last 5 years. I want another 4-year extension or a 3-year extension with 3%. Otherwise, I'll give you back the keys. And most banks right now, they do not want to be landlords, because the minute that they take the keys and they have to sell the building to get asked because it becomes a non-performing loan, they have to record that and put that into the market and say, look, we have a non-performing commercial asset. And if there's a lot of buildings that they've issued that have that kind of situation, that's really bad for them. So basically, the banks right now are in the zone of something called lend and pretend and extend, where it's like they pretend like there was no default, and instead they're just extending out the terms. They're losing money because they could be getting 5, 6, 7% in the open market for that same money that they lent out. But instead, they're getting 3% from these guys, or 4%. But they don't have to record those losses. And I think that's where the real value is, because now you're starting to see some traction in the commercial real estate sector, especially with Class A buildings coming back. These guys have pretty much Class A assets. And they're a lot more diversified than some of the other REITs are, which are pure office plays. So these guys have a lot of great things behind them that make them a much safer bet. And you're sitting at a higher position in the capital structure than the common equity. By the way, the common equity, there is no common equity for Brookfield Property Partners. They got bought out by their sponsor about a year and a half ago. So the common equity right now is actually with Brookfield, which is the main parent company. And Brookfield is a huge, huge asset manager. So they're not going to let this thing go out of business, because they just can't. Otherwise, they'd be taking huge credibility loss. They would take huge paper losses. And so there's the bet that I have here is that, one, they'll survive because Bruce Flatt is the CEO and Brian Kingston is on another level when it comes to property. So there, like I said, there's a huge opportunity here to get a nice, safe return. The only thing that I would say, people need to understand how these guys generate income, and you're going to get issued a K1. Okay, so be mindful of that. All right, so that means that you will have to pay taxes on this. So if you're getting a 12% return, but you're in the 40% tax bracket range, that doesn't mean that you're making 12. That means that you're technically only making 7, because you're paying 40% out in taxes. Logic, it makes sense, right?
It does, yeah. So we'll probably update everybody on that one. I do have the public account that we can share in just a moment, but we do have a $20 super chat that I wanted to thank VC for. So thank you very much for the $20 super chat. As always, it's much appreciated. It always goes back into the public account for everybody to kind of see. And the thought is buy 1 share of APCX for the public account, keep the rest. I don't know what APCX is, but if we like
it's a payments company. It's a payments company.
So I don't know much about it. Maybe Chris does, but anyway, that $20 will be put to good use. What else was there? I actually was telling Hot Tevis about BPYPM in La Mexico, because he's a dividend account that he's starting up. I don't know how much he's talked about it, but yeah, it's one of the ones that I was kind of telling him a little bit about, just because of the potential payments. But I told him a little bit about the risk and everything associated with it as well.
So one other thing is, not every broker carries BPYPM. Okay. By the way, everyone who's complaining about Matt, he's running the situation right now he has off of his hotspot and his regular microphone. He's got some technology issues. So it's not, Matt doesn't know that he sounds bad. It's just he's got a issue.
I do.
Yeah.
Matt to zero. Hopefully tomorrow, everybody in the area, unfortunately, their Xfinity is down, and also AT&T is down in the area. We're probably getting attacked by the North Koreans, but anyway, different story for a different day. And then I'll also, I don't know where my hub. I have like a 4 USB hub extender, and I don't think I left it in Mexico, but I don't even think I took it out of my backpack. But it is nowhere to be found. So
Trader Joe Spot, you don't pay taxes in the IRA. All the dividends that come into an IRA, it stays in there. You won't have to pay. So this is a perfect thing to put into a non-taxable account. So Roth IRA, traditional IRA, you can put it in there. It's fine. It also, from what I understand, does not generate any UBIT. So you don't have to deal with that BS. So you're getting pretty much as just interest payments. All right. Buy yourself a Mike, Maddie, or YOLO into SoFi.
Yeah, I did dabble a little bit into SoFi per Tevis's thoughts. So and so far the stock has been going up. So congrats for everybody that has done that. But
any chance you have our portfolio by any chance up there?
I do. Yeah. Let us pull that up. So thank you, Hot Tevis, for the $20 Canadian, which is like, I don't know, $5 US super chat. So let me blow this up a little bit so we can get a better view of it. Because anyway, pretty much everything gets cut off at the bottom. So we're up to just under $1,800. We did add another $100 or so last week because no, I did that a couple weeks ago. We should be adding a couple $100 here, $150, $200 in the coming days once February closes out. We've had a pretty good month. Obviously, we just got some super chats. That'll be added into here as well. So hopefully, we'll be getting closer to the $1,900 a month, or not to $1,900 a month, $1,900 mark. But this is in alphabetical order. So you can see we are probably going to go down to about $100 in cash because we made that buy with BPYPM. So we're up to 40 shares in that bad boy. We have ABCL, which is up 14%. Celsius is probably our biggest runner because we have 8 shares of that. It's about 30% of the portfolio. We're up $100 on that overall. We have TelZ, which has done really well, up 27% there. TQQQ, which is up 63% since the October timeframe. So congrats to all that hold that in their portfolio. I know I do. Verizon up just under 10% there as well. And we had Rocket Lab, which coming open tomorrow, this should either be flat or slightly down, but it was a relatively good earnings call for RKLB today. Next is flat.
The one thing is with the dividends, does that somehow lower your cost basis here from a calculation standpoint? Because if you look at TelZ, we got a nice fat what is that thing called? Interest payment on that bad boy. Mm-hmm. So not only did we gain on the capital appreciation, right? But we also got a dividend payment, right? Not dividend, an interest payment.
But we discussed, and correct me if we were deciding to change this, we decided that we would use any dividend payments to buy any XT.
So no, that's what we're doing. No, that's fine. That's fine. I'm just saying, is it recorded on here? Is so that this way, because our total return looks like it's 13%, but it's actually tracking close to 16% if you take in all the dividends and you put it in there. Yeah. So no, I was just wondering, like if there's because the thing is, right now, if you look at our portfolio, we've got TelZ, which is a nice interest payer. Verizon is a good payer as well of dividends. And now BPYPM, even though it looks like it's only up 0.16, the interest payment that's coming in March is going to be close to 3%. So it's a 3% return on there. You know what I mean? So it's just keeping a track of accounting in our heads for us. That's all. Not necessarily this, Yeah.
Yeah.
But I agree. We should keep putting it in next. Yeah.
We should, because at least we should keep track of what our actual on the side, like you said, contributions versus what we're actually getting. Because Orsted, we sold at a profit. We sold Nintendo at a profit. We sold a couple things at this point at a profit, and it doesn't show up in here per se.
I think with Fidelity, what you can do is you can go to the year-to-date performance and you can see the gradual rise. So I don't know if you have that, but you could just show that, and so this way it gives us a better
there's
accurate.
a lot of account numbers and stuff. So
don't do that right now. Don't do that right now. I'm just saying in the future we could take a look at that. You know?
I do this because there's only one account number and we can cross it out.
Yeah, exactly. Yeah.
So unfortunately, in the place of being transparent, there is not everything that you can see. But so there's that. Any thoughts on this? What are your thoughts with the whole BPYPM sort of thing? Is this something we're going to hold for months, or is this something we're going to hold for just this quarter, and then we just, as soon as we get the ex-dividend date, go back to cash?
No, I think we could keep it there. I mean, the reason why I wanted to basically take that position is, one, some of the other stuff can fluctuate wildly up and down if there's a market correction. I don't think this is going to be moving anywhere. And so I think we're getting a good yield on it. And the yield that we do get, we can pile that back into NEXT. And someone asked, like, what's your long-term horizon? It's 10 years. Like for NEXT, it's going to be about 10 years, not 10 years, maybe I'd say probably closer to 6, because if you take the LNG, and maybe one of these days, Matt, like I'll fly over to Texas and maybe me and you can go visit the NEXT LNG site, like near there. They probably won't let us on the site, of course, but near there, in Brownsville, Texas. I think that's what it is.
Yep.
You know, so this way we can check that out. But basically the construction's already going on for phase 1 with trains 1, 2, and 3. And FERC, I actually put that on the Patreon with where they are in the construction, right? And then they also have phase 2, which is 4 and 5, which are going to be much more profitable in terms of distributable cash flow. And those have not been FID'd, but those can get FID'd anytime this year. And more than likely, based on just the cost, the cheapness of how discounted the price of natural gas is here, and how like the European Union is transitioning away completely from Russia, that just poses, and Asia's insatiable demand for LNG. I mean, it just makes sense that, you know, you're going to have a ton of capacity that's going to be needed. So NEXT, I think, is definitely going to get its FID, which should help tremendously. And then on top of it, the phase 1, 2, and 3, when those are complete, they'll be throwing off about 200 to 300 million in free cash flow. Distributable cash flow, not free cash flow. Let me rephrase that. Distributable cash flow. That distributable cash flow represents almost a 20% return on today's prices, not in the future, on today's. And if 4 and 5 come online in about 2-3 years after trains 1, 2, and 3 are done, that means that the distributable cash flow will go from 200, 300 to close to 1.2 billion per year, which means that you will be basically getting what you paid today in the future as a distribution in cash. So think of it this way: you put 5,000 in today, in 7 years from now, you'll probably be getting 5,000 a year going forward. So that means it's 100% return per year in 7 years from now, but not yet. Until the construction is complete, until everything is done, you're not gonna get that. So
I think people are still in disbelief, because I was literally on the plane yesterday. A guy who does some gas to rail stuff in Brownsville specifically, and I was telling him about, next decade it's near Brownsville, and I was looking at potentially buying houses in Brownsville. 1, because you're going to need more people to be working there, and then 2, you have Boca Chica right next door, which is directly south of that channel, which we could go in here. So you literally have all this stuff that's right nearby, that is going to be getting a lot more, I guess, exposure to the Brownsville area. So I was like, I wonder how real estate is going to be doing up there. Guy immediately says that project's never going to happen, blah, blah, blah. I'm like, there's literally shovels in the ground. Like you can't avoid something like that. I think still people are in a lot of disbelief that a lot of these LNG projects are like far-fetched and they're not going to make any money. And the thought process is like, how are they not? I mean, if you have natural gas prices in the U.S. below $2 an MCF, why wouldn't you be sending it to Japan, Europe for $10 an MCF? You're literally making $8 spread on that, right? It's literally the whole reason why these LNG things are going forward. You have Qatar, you have all these other companies as well that are countries and companies that are investing in LNG kind of going forward. And a lot of people are still in absolute disbelief of this entirely.
Mm-hmm. And this is from a couple of months ago with Rio Grande LNG, which is next decade's project. But check it out. Whatever. If we get demonetized, we get demonetized. Whatever. This is the construction area right now. So you can see that they've actually begun all the early stuff here. I mean, they also had their groundbreaking. Where was it? Right here. So,
today we gather to celebrate a momentous occasion, the groundbreaking ceremony of Rio Grande LNG Phase 1. This marks the official beginning of the project. Rio Grande LNG Phase 1 is a project that not only will shape the future of next decade, it will help shape the future of the Rio Grande Valley. From an energy perspective, Phase 1 is about delivering low-cost, lower carbon-intensive LNG to the rapidly growing natural gas market. Now countries from around the world will be looking to Brownsville and the Rio Grande Valley to help meet their critical energy needs.
Matt, we will not let you or your team or our stakeholders down. We're really grateful that you put your trust and confidence in Bechtel almost 5 years ago.
That's the other thing too. They've got number one, they've got the financing lined up, which is a key part of getting these things done, right? So you've got that done. You've got engineering support. Engineering is good to go. Like Bechtel is already ready to go. They're doing all the work on it. So the financing, the construction planning, all done. You've got regulatory approvals already by FERC, right? So that's another challenge that you usually have to run through. So when it comes to like developing an LNG project, you have multiple hurdles you have to kind of jump over in order to get this project to be the get-go. The first hurdle is usually identifying a site, getting approvals from the locals, right? You need local approval. You also need state approval and all the other stuff. Then you have to get approval from the federal government. So the federal government is the next step. They have to approve that the site doesn't have some sort of extinct, like a wildlife species that might go extinct or whatever. You have to deal with all of that. So once you get approval from the state and local side, then you get approval from the federal side. Once you get approval from the federal side, now you have a project that you go out there and you talk to financiers and say, look, this is how much it's going to cost. Usually you get a quote from companies like Bechtel first and saying from the engineering side, what is it going to cost you? Once they give you an estimate, then the financing people line up and then the Bechtel people approve what it is. And then last but not least, you have to deal with all the what is it called? The super majors who are actually going to be doing the offtake agreements, right? So they've got the offtake agreements already done, because imagine building a plant, but you don't have contracts out in the future, people are not going to do your financing. So everything has to kind of fit together. And once everything fits together, you've got yourself a fully FID project ready to go. The only equation now that basically the risk that you have, number one, is if, I don't know, people just use nuclear forever from now on, and maybe that just tanks like the demand or need for LNG, which is highly, highly, in my opinion, unlikely. So that's number one. Number two is if there's some sort of natural disaster, godlike event that destroys everything, it could also sink the project. So that's another thing that's a risk. But outside of those two main things, I don't think that there's much risk here. You've got a fully FID project ready to go, federally approved. You've got a second phase that's federally approved now and probably going to get FID sooner rather than later. You've got strong counterparties on the construction side, on the offtake side, and on the engineering side. So this is, in my opinion, it's an undervalued company that's in the public markets. There are other LNG companies that you can buy, but they've already proven track record of success. But their stock price is up there too. So there's not a lot of alpha left. Whereas for this one, there's a lot more risk, technically speaking, but there's also a lot more alpha to be had. So you are not going to see a dime in distributable cash flow for the next 5 years, at least, in my opinion, maybe even 7. But after year 7, bro, you are going to be making money hand over fist. So this is where, if you want to be a long-term patient investor, this is the kind of stuff that you buy now so that you can, you can eat later. And one of the things is, think of it this way: when you plant a tree, like this is something my dad says, when you plant a mango tree, you're not going to enjoy the mango at least until year 3 or 4. But that doesn't mean you shouldn't go plant a mango tree. So that's what it is. You're basically planting some mango seeds with next decade. You will not, I'm telling you right now, you will not see any distributable cash flows for the next 5 to 7 years, maybe even longer. But once it does start generating distributable cash flows, bro, it is off to the races. Like, look at LNG, like the company Cheniere. Cheniere is just on another level of generating cash flow. Imagine all those people that bought in 2010 when that shit was $3 a share. You're set for life. So,
and I think the thing that this needs to play out for it to truly be as beautiful as we'd want it to is, like Chris alluded to, they've pre-sold a lot of the LNG shipments out. 92% of those are already kind of paid out, and Total has taken an equity position in the first phase of trains, and same with I think it was either a Singaporean or Middle Eastern investor that took off, about another 50%. And so Next doesn't own all of the first 3 trains, right? They own a percentage of it, right? But they don't own all of it. So I think that that's just something to recognize, is like, that's why the first 3 trains of distributable cash flow isn't nearly as much. However, once that gets going, at the moment, Next does own, I think, probably, if not 100%, close to 100% of phase 2, which is the 4th and 5th train. And this isn't unique, right? This is something that happens to a lot of different places worldwide. I mean, when I was doing stuff in Trinidad, different trains have different equity positions just based off of, because you have so much gas that's going through. You need so many people to supply these things that, you basically need, and they're so expensive of projects, you need to help with capital exposure and risk mitigations and everything the like. So this isn't unique to have one train or multiple trains have different equity shares versus another, and it changes sometimes as well. But that's the huge upside part is once Next gets the cash flows coming from train 1, they have the allotment to do trains 4 and 5. Phase 1. They have the allotment to do trains 4 and 5 as part of phase 2, and they're expecting to FID that later this year. And that's where I think that you'll see a lot of the buzz coming in, because that just means that they're going to be getting prepared once they get some of these shipments out in the 2027-2028 timeframe, that then they can immediately start construction on trains 4 and 5. And that's where the big money is going to be, that kind of Chris was talking about. So you're talking about 200 to 300 million in distributable cash flow from phase 1 of this project. And then once you get to phase 2, that's when you see an almost doubling or tripling of that distributable cash flow, close to $1 billion. Now, the company's only worth $1.2 billion. So what Chris is kind of alluding to is you have that ability to almost distribute the market capitalization as it is today. So if everything goes beautifully and you put in $5,000, maybe in, say, 10 years time, when you're in 2034, you're going to be getting $4,000 a year, $5,000 a year. Is it worth that gamble? And Chris is kind of talking a lot about what you're getting from Cheniere, and Cheniere is very similar to that. If you were to have bought it at $2-3 back when everyone was thinking, it was going to be an import facility. This is before kind of natural gas had kind of like a revolution in the United States. We started drilling horizontally. We started doing natural fracturing, not natural fracturing. Sorry, I deal with natural fracturing, hydraulic fracturing, to be able to get more productivity out of the shale rocks that are kind of within the United States. Then we saw this revolution to be like, oh shit, we have way more gas than we know what to do with. We have to actually export it, compared to, we were starting to think about having to import from Qatar, Saudi Arabia. Sorry, not Saudi Arabia. Russia. We were thinking about having to import all this because we didn't have nearly the conventional gas that we need to be able to support the country. Now we've unlocked all this shale gas that we basically have supply for over 200 years, unless we export it to other countries. So you have countries that don't have natural gas, Japan, a lot of Europe, And the thing is a lot of Europe have kind of regulated themselves into not being able to produce as much oil and gas. So you're sitting here now with a huge amount of pile of natural gas in the United States, where when you look at it, you're below $2 an MCF because you have so much supply. If you don't export it, then you're literally just going to be producing it for literally pennies on the dollar compared to what you could sell it at in Europe and in Japan. And a lot of people's portfolios are really ramping up to be exporting from Louisiana, Qatar, Australia is doing the same exact thing. So people are always trying to go from, and even they're actually exploring this potentially in Guyana as well. Exxon's thinking about potentially looking at putting up an LNG plant because they're literally making or will be making 1 million barrels of oil a day. And what are they doing with all that gas other than flaring it or sending it to the local market? But you only have a nation of 300,000 people. How much natural gas can they use? And it's the same exact thing that happened in Trinidad in the late 90s is once you started developing so much, the only thing you could do is export it. So now it's a huge contributor to their GDP because you're able to export so much of the gas elsewhere.
And remember, the business model that these LNG export facilities have is not determinant on the price of LNG. Okay, so price of LNG goes to $2, it goes to $5. It does not matter for them. They are infrastructure. They are basically providing a service. Think of like a toll bridge, right? Toll bridge business models are amazing because it doesn't matter in terms of like the cars that are going across the bridge, like what the price is. It could fluctuate up and down. They're getting fixed amounts per shipment that they send out. So they have these fixed contracts with these super majors, which insulates them against price fluctuations. So I know a lot of people who invest in oil and natural gas, they go through these boom and bust cycles a lot, where basically the price of natural gas goes down, everyone loses money, and then they die, and then price of natural gas goes up, they all make money hand over fist, and everyone is happy. These guys don't have to worry about that. It's literally providing a service. So that's what I like about this business model as well.
Can you, because the guy on the plane has me second guessing things, not really, but these are already made pipelines, correct? So these are not ones that have to be built. And I just want to double check that these are already in place sort of pipelines that don't necessarily need to be built.
I mean, it says it right there. The VCP pipeline has capacity of 2.6 billion, right? And is currently only 50% utilized. And right there, the Rio Grande will be directly connected to VCP. So even if they're not connected right now, they eventually will be, Right there, yeah. RBPL is under construction, expect to be completed prior to commissioning of Train 1. So Enbridge, Enbridge is a big guy. They're not going to make promises of building a pipeline that they can't deliver, Yeah. So,
and this is the only thing is like, there's not like, while Rio Grande will be the first in commission in this port, they're not the only one that has a plan for this site, right? There's like 2 or 3 others. It's this Rio Grande at the moment is the first, and I think probably the largest, if I remember correctly, because I think or maybe I'm thinking of Driftwood that's supposed to be 27 or something like that. But this one's still going to be pretty large. I think it might be like 11 or 12, and then with trains 4 and 5, it might be 17 MTPA. It's still going to be very big.
I mean, let me look at the FERC site. Hold on once.
And then I'm trying to think what other items what did I want to cover? Oh yeah, ABCL, and then we can call it. See if you did any DD on that one or not.
Give me 1 second.
There's some people also asking a little bit about like Kupang and stuff like that. No, I did not have the ability to look at Kupang and some of the other companies as well. And by trains or compression trains that take gas and compress them down to 1/600th their size, so you can export them via ship to other countries.
Okay.
Why they call trains is because they're long and metal. And if you have multiple in a row, they look like trains at a train station.
Okay, give me 1 second. I have so many. This is the thing I hate about Windows, like sharing, and it's hard to not now share, view this as a.
You got this, hot Chris.
Stop.
We believe in you,
First,
guy.
stop calling me hot Chris, dude. It creeps me out, man. Don't do that. All right, just my name is Chris. Just call me Chris. All right, I'm not a hooker.
All right.
There we go. Hold on 1 second. All right. You can call Tevis Hot Tevis. He's actually Hot Tevis. Me, I'm just Chris. Window. There we go.
It's regular guy.
Okay. So can you see the screen right here?
Yeah.
Okay. It might be a little bit hard to see because I am sharing a screen right now, but here's all the LNG facilities that are currently either under construction or in commercial operation already. So Sabine Pass is owned by Cheniere Energy. They've got 6 trains running. The first one, of course, started in 2016 with commercial operations. And this is how much they're basically generating per train. So this one is in full commercial operation. Cove Point already ready to go. Elba Island is in Savannah, Georgia. These guys were basically an import that got converted into export. Corpus Christi is also good to go. Cameroon is commercial operation. This one right here is in commissioning phase, but there's one thing. So, okay, so this is good. So the operator is Cheniere Energy, which is LNG. This is Berkshire Hathaway. I didn't even know that Cove Point was by that Berkshire owned that. This one is by Kinder Morgan. Kinder Morgan is a LNG MLP. So they own a lot of pipelines and stuff. So you can also buy Kinder Morgan stock if you really believe in it. But I don't, like I said, I don't think there's a lot of alpha there. Cheniere Energy, this is, once again, Cheniere's second facility. Sempra is also another MLP. Freeport is a private company. Venture Global is a private company. Qatar, ExxonMobil, they're doing Golden Pass. That's under construction right now. Plaquemines is also Venture Global. So Venture Global LNG is a private company. So you're not going to be able to invest that. And then Sempra is also, it's a public company, but once again, the alpha may not necessarily be there. Corpus Christi Liquefaction. I don't even know this one. This one is, but they have 14 trains that are coming online. That's crazy. But the one that we're more focused on is right here, Rio Grande phase 1. So they've got train 1, 2, and 3. So the expected operation is 2027 and 2028. So first cargoes are due to be shipped during that time. I always bake in an additional probably year because of how things are with delays, and if it's during the mid-year, they kind of prorate how much they're going to be getting. So I'd say the money that we're going to start generating, they're going to start generating money in 2028. And that first initial distributable cash flow may not go to shareholders right away. It might go towards all the commissioning process and all the other stuff. So I think 2028 is when you first start to see some distributable cash flow show up. Not a lot of it, but then 2029, 2030, that's when you're going to see full distribution start making their way into the stock. And that's usually when you'll see a huge amount of stock appreciation. So you can see here, this is the next decade. This is also, these are a bunch of approved facilities. That doesn't mean that they've been FID'd yet. So as an example, Tellurian, this is their Driftwood project, which has not been FID'd, and it may not get FID'd. It may actually just, I'm hoping that they get bought out. I think that's the thing for them. But you see this one right here, Rio Grande LNG part 2. This is for next decade. So next decade, it's already approved and ready to go. So they just need an FID for this at this point.
Yeah, so I think I was calling down the wrong Wrong trace. I think this is actually 27 MTPA because if I looked at the previous tab that you had open, it was like 5.4 MTPA each.
Yep.
So that gets you to about 11-ish. Or sorry, 16-ish, 17-ish. And then
Yeah.
if you add the other 11-ish, you end up at like 27.6 for both phases.
Right.
Yeah. So okay. I don't know why I always switch the MTPA for Telluri and Driftwood and this one, but they might be actually pretty
Yeah.
comparable. It's just that
Yeah.
these first three are 17 MTPA.
Yeah. I mean,
Cool.
the biggest thing is with this is that this is the only public company that has this tremendous alpha that could be generated, because the market hasn't necessarily factored a lot of this stuff in yet. So that's why it's still trading at $1 billion valuation. But the minute that this gets closer to getting a, what is that thing called, commercial operation, all the people are going to be like, oh my God, they're about to commission. Let me buy the stock. Let me buy the stock. And then you'll see a run up that's going to go way into the, way up into the right. So, just
that's
FYI.
exactly what happened with Cheniere. Yeah.
Yeah. So we can take a quick look at Cheniere, because Cheniere is a good example of that. You know what? No, I'm not going to do that.
Yeah, I was gonna say we've gone through that on the channel before. If you haven't, go look for it.
Yeah.
The backlog of all the items is on the channel on Cashflow Chronicles TV. Chris, a lot of people have been asking, have you done any research on ABCL since they did the earnings report last week on Tuesday?
I only briefly touched on a couple of things. There was a concern that some people raised, like, oh, Peter Thiel resigned his board seat. Peter Thiel helped develop the initial part of their business model. But other than that, Peter Thiel's got personal reasons why he left. I don't see anything, wrong with him leaving. The company's in good footing. They've got a lot of strong counterparties that already have development projects with them. They are doing a couple of drugs where they're going to do the development and put that into the ecosystem. So I've got to do more research on the true market potential and what that means in terms of alpha for these guys. But once again, this is a play that's probably 5 to 10 years out. You're not going to see tangible returns right away. And you have to be okay with that if you're buying companies like this, where next decade, you're waiting for a 5-year payout return. With Accelera, 5-year plus, you're not going to see that instant gain. You're not going to see, this is not your traditional business model where
it's not
you're
Chris's
going to have
Patreon play. That's what you're saying.
No, this is, believe it or not, no. Patreon is completely different. But this is, think of the business model like this. You have this long investment cycle that takes years. And then once you hit it big, it pays off, and it pays off big, right? That's what the business model is for both next decade and for Accelera. They have a crap ton of drugs that are already in the pipeline that they've contracted with, but now it's up to the pharmaceutical companies on the other side to complete the clinical trials and then bring the drug to market. Once the drugs come on the market, it's royalty payments, baby, for Accelera, and it's royalty payments that go far into the future. So, as an example, think of a guy who's like a high school scout, right? He is looking at an athlete saying, look, I think this kid is going to go to the NFL. Now, what does that mean? That means that he is not going to get paid for a little while. But the minute that kid enters the NFL, that guy who found him, did the management contract, everything else, he's going to get a big payday. And not only is he going to get a big payday right away from in the future, but he's going to keep getting that as long as that player keeps playing the NFL over and over. So right now, we think that we found a couple of Tom Brady's in the rough. That is the investment that we're making. We think Accelera one day is going to be the Tom Brady of the pharmaceutical space. We think next decade is going to be the, I wouldn't say Tom Brady because Tom Brady is like up there, but we found like, I don't know, the Russell Wilson.
Yeah.
of it.
Someone's going to make some money, but I mean, that's the thing that Chris is saying. I mean, they could break their leg and they might not be able to make it to the big leagues, right? Something could happen, you know, they might run into some huge subsidence issues where the land starts caving into the canal, and next thing you know, the footing that the whole plant was supposed to be staying on isn't as exactly fitting as they once thought. You know, stuff like that can kind of come out of the woodwork and truly upend your black swan sort of events that really screw you. But I mean, I've been in this business before. Bechtel is not somebody that's just like brand new, off that's not done this before. They've literally done hundreds of these sorts of projects around the world. They're globally known. Hell, if Bechtel was a publicly traded company, I'd invest in them because they know what the hell they're doing. So there's that. But before we touch or move on to Rocket Lab, because I guess I just
one
wanna finish on that.
one last thing. So Michael Anthony, why can't Accelera make a profit when they have big companies like AbbVie paying them?
Don't pay attention to that guy. He only wants to invest in Purdue and like food companies. So
no, it's fine. I'll answer it because it's worth answering real quick. The way that they structure these deals is that the drug development of it gets done by the pharmaceutical company. The research part of it gets done by Accelera. Accelera does the research, provides that molecule to these guys. These guys have to take it to commercialization. That means that Accelera does not have to take any risk in terms of doing the clinical trials and the commercial part, which is one of the most expensive parts of drug discovery. A lot of people think discovering the drug is the hard part. That's not actually. It's actually the commercialization part that takes the most out of you. Now, the thing is, Accelera says, look, we are exceptionally good using our technology to do the research. So we take that off the hands of these pharmaceutical companies. We hand them finished products. And the finished products, they have to now go in and basically develop. So that's the thing, Michael Anthony. This is a new company. This is not a company that has a lot of drugs on the market. They don't have any drugs on the market, actually, at this point. They did have, at one point, both the two COVID antibodies, bamlanivimab, and the other one was bebtelovimab. They made great money on those because they got commercial revenue from Eli Lilly. But now that those are not necessary anymore, that money is drained. But they still have a crap ton of money in cash, and they do get research payments. But these research payments are basically keeping the company afloat. They're not paying for profit. So right now, they are basically operating in a neutral zone. So they're not going bankrupt. They're not going broke. They're not running out of cash. But that also doesn't mean that they're generating a whole lot of free cash flow that can go into the company again to shareholders. So that is the key for Accelera.
Yeah, and I just want to say the two drugs that they're going to move into to clinical trials. I don't think they're not clinical trials. IND. I don't think that those are necessarily going to be barn burners. The one, they're not disclosing what exactly it's for. The other one, I think, was like only a $2 or $3 billion market potential, but I think that it might also grow. So I think that they're just doing that because they feel confident that they'll be able to get it to market, be able to potentially start getting some cash flow to be able to help with sort of the cash burn situation that they're in right now. So yeah, that's just some thoughts there about the IND medications that are there.
Yeah. Yep.
They're going to be putting.
And by the way, if someone said, what about dilution? There's very, very little dilution. All right. You just look at their shares outstanding. They're not diluting a lot at all. So they've got the money in the bank. So if you look at their financials, 1 second, let me just pull it up. Why am I using stupid browser, man? Hold on. Financials. Let me just share my screen. So, okay, so this is Accelera's financials. Okay, so let's just take a quick look. You can see here on the TTM basis, they're only generating about $9 million in cash flow. Once again, this is for like research payments, but it's not anything more than that. And operating expenses, they have about 71 million, which means on an operating income basis, they're burning about $62 million per quarter. And then on top of it, you're going to have right here net non-interest expenses, but it's not not interest expense. Sorry, it's a income gain. So they have cash on the balance sheet that they're using to basically, put it into treasuries, and they're getting money from that. So this is like, it looks like, oh my God, this is that they're losing money, which is true. They are losing money, but when you look at it from a cash flow basis, right? Their cash burn right now for last year was about $121 million. Okay. But if you look at their balance sheet, right, they have almost 1.48 billion in assets, of which 760 million of it is in cash, which means that they have 7 years worth of cash burn at this rate. They don't have to worry about dilution with that. And not to mention, like, they don't have a lot of debt either. So, and
Very
I think
good.
the share price reflects that as well. Because I think, what's the market cap on Epsilon right now? Market cap is,
I was going to say 1.2, but I don't know.
1.45 billion.
Okay.
So they're basically 75% cash.
Yeah. I'm curious to see what ends up being with that one. I think you're right. I think people just need to recognize that there's hair on it, right? I mean, you could explore hundreds of drugs and never get one actually moved to actual through the FDA and everything like that. So I'm curious to see what ends up happening with these IND drugs. And also curious to see, I think they got rid of, like you stated, the 2 drugs that they were doing for the pandemic are now obsolete. They're not using those anymore. And then 2, there's like point number 2, they're down to like 8 or 9 or 10 clinical trials with other companies. And then they have the 2 IND drugs that they're pushing through. So curious to see where it ends up happening within the next 12 months with Upsellera if they end up starting to make a little bit of cash. But I was just going to touch a little bit about Rocket Lab. I don't want to touch too much about it because I literally did a 2-hour live stream earlier covering the earnings. But for me, the big takeaways were that, one, they're still on track for the medium launch vehicle to be on the pad, if not launched, by the end of the year. So I think Peter Beck did a good job explaining the different milestones that need to happen. So we should be getting a hot fire test for the Archimedes engine within the next couple months. He stated, hey, we wouldn't be putting up the cement padding and everything like that in Walps, Virginia, if we were not going to be testing it within the next several months, right? It'd be a waste of capital. It'd be a waste of everybody's time to put up a launch pad if you weren't going to be hitting some of these milestones within the next few months. They talked a little bit about how they're expanding their typical normal photon satellite design and kind of having 4 specific modular designs that people can add to for their preferences, whether you're going deep space, telecommunications, low Earth orbit, or if you're trying to put something in space for like 12 years, so that longevity piece, or if you're going for re-entry, right? So they've now done all those sorts of different trials for all their satellites. So they're kind of saying, these are our 4 modular designs. This is what we're going forward with. They're planning on having 4 launches in the first quarter. They still feel like they're on track for 22 launches throughout 2024, not inclusive of the Neutron launch. What else was there? They stated that the convertible debt, $300 million, is likely to be for non-organic growth, so potential for acquisitions. But that being stated, they said the prioritization for them is getting Neutron on the pad by the end of the year, the 22 launch cadence, then everything else kind of falls after that. So I anticipate the additional capital was because they thought it was a good opportunity. They just come out of working with Space Force to be able to get those $500 million contracts. The backlog is now above $1 billion. They're hoping to get close to $400 million in run rate for the year. So all things seem to be moving in the right direction, but still does not waver me from stating, for anybody that is looking at Rocket Lab as a potential investment, RKLB, that there is still some capital exposure between now and probably the next 6 to 12 months, just before you find out about Neutron. But what I will say is with what they've been able to demonstrate, coupled with the additional capital raise that they've done through the convertible note offering, I would limit I was kind of stating to people, hey, there is a 10% opportunity for this thing to go bankrupt. I would lower that now to 5%. They ended the quarter, this is before the capital raise, with $320 million in cash. Their burn rate between now and the end of the year for Neutron is going to be about $100 million. So by the end of the year, they should probably end up with about 150 to 175 million in that cash, and then they just raised another 300 some million dollars. Not all of that is going towards the balance sheet, though. So even by the end of the year, I'd still expect them to be way above $300 million in cash, except for if they start doing an acquisition mid-year or something like that. But they did have really good conversations with TD Cowen, and they will be having more conversations with friends in the coming months. Adam Spices is going to be going to 4 other different conferences where he'll speak. But they're adding a lot of color to. They don't think that the SDA contract that they got for 500 some million was a one-off. They're still in contention to be able to do the launch aspect of that, which could be another couple $100 million worth of contracts for that. And I think that obviously is waiting for Neutron to really go out. But there's a couple of years before that needs to happen, right? Because a lot of these satellites are going up in 27, 2028. So you have a couple of years before that launch contract really needs to be solidified. So I anticipate with Neutron getting on the pad, that'll be in contention for that. And then also they don't think that the SDA tranche 500 some million dollar contract was a one-off. They think that that's something that they could do on a pretty consistent basis. If you think about what the SDA is trying to do, they're literally trying to put like a layer of satellites for communication and anti-war purposes around the globe. So that's not just going to be 5, 10, 15 satellites. It's going to be hundreds of satellites around the world. And so if you have that, then obviously Rocket Lab and many other companies will be in competition for that. Other than that, I think the call, I think people were expecting something like absolutely major. I don't necessarily know what people are really expecting from the company. They're doing relatively well from just trying to ramp up. They did 10 launches last year successfully, or rather successfully. 9 out of the 10 were successful. And then they've done two this year thus far, and they have about 20 more to go for the year. So they're doubling their cadence from last year to this year, and they're also trying to get another brand new rocket on the pad. So I think in terms of every other company on the market, this is obviously a number 2 compared to SpaceX. With one, they're the second most launched U.S.-based vehicle for the 5th year in a row, which I think is impressive on its own. That's more than ULA, which is a combo between Boeing and Northrop Grumman. So I don't know what other companies you could put together to try to put rockets into space that would do better, but Rocket Lab, did better than them, which I think is a testament to their ability, and did it at a fraction of the budget. And then you have SpaceX, which is doing absolutely phenomenal. So I'm up to 9,100 shares in the company at a cost basis around $5.30. I have about 40 contracts that I wrote at $5 for puts. Those are cash secured. Those are sitting in my IRA. Worst case scenario, the company goes belly up. But to me, I think in reality, this company has potential to at least 5x from what I believe. So going from a $2.5 billion company today to upwards of $15 billion. I think that's rather simple. That obviously isn't going to be tomorrow. It's not going to be next year, but within the next, say, 5 to 10 years, once you get some of these items down, I believe that this is opportunistic. These guys are second compared to SpaceX, and SpaceX is valued at $180 billion. So if these guys are just a couple years behind, even if they're 5 years behind and eventually get to a place where they have a direct competitor, which is the Neutron rocket, to their Falcon 9, they're going to be selling launches for $55 million a piece. I mean, within a couple of years, this Neutron rocket will be making and generating close to $1 billion in revenue on its own. So they plan for 1 launch in 24, 3 launches in 25, and 5 launches in 26. So Even just in 2026, if they get the 5 launches, that's $250 million in revenue. And they're aiming eventually to get close to a 50% gross margin for that. So overall, conference call went well. It went for like an hour and a half, really long Q&A session. But overall, I think it's just a year of delivery for the guys, and we'll see what pans out. Chris, have I convinced you to invest yet?
No. Well, I think there's a future in it. It's just I don't understand the market for it. So, you know, like I said, I don't see the value creation just yet. That's all. But it's something that I don't feel. I think it's still another like 5-6 years away from really being a major industry. And I don't know ultimately who the winners are, with the exception of SpaceX for right now. So yeah, just that's where I am. It doesn't mean that I'm right by any means. So just FYI.
I hear you, man. I think you got 12 months, and I think when this Neutron rocket takes off and it is successful, it might take once or twice, but once it is, I think there will be a lot more chatter in the industry. And I think what's going to happen between now and then, you're going to have Astra go bankrupt. You're going to have Velo 3D go bankrupt. You're going to have a lot of other these companies go bankrupt. And unfortunately, all their backlog is going to start concentrating more and more onto Rocket Lab. And the last thing I'll leave is the Electron rocket, which they were kind of anticipating having an average sales price of about $7.5 million. Because of this new concentration that they're seeing, they've upgraded it to about $8.5 million. So anything more than that, they're obviously just making higher and higher gross margins going forward. So admit, yes, I am selling it, but I was also doing the same for Palantir many moons ago in 2020, and had the longevity of seeing that to fruition. And now we know where Palantir is going. So hopefully this one within the next 12 to 18 months will be getting close to EBITDA profitable as well.
There is a secret company that I'm doing research on and due diligence on. It's underappreciated right now, but it could be big. I'll share it for anyone who's still tuned in right now, just so that we can take a quick look. It is... Hold on. Your browser has blocked your screen. Check your screen out. Well, all right. Well, turns out I can't really talk about it right now because my browser's not working. But yeah, I'm gonna eventually publish the due diligence, but it's a really, really good play. So once I have the due diligence,
maybe share it on the Patreon, and then we can come back.
Yeah, it's down year to date, but eventually I think it's got a lot of potential. So yeah.
Interesting. Are you going to share it at all tonight on the Patreon? I'll keep my eyes.
Nah. It's headquartered in Virginia. Virginia is the place where you want to be for government-related cybersecurity. So, yep, that's it. Yep. Well, I'll tell you about it after the call. I'll tell you after.
Yeah, very good. For any of you guys that have not subscribed to Chris's Patreon, Chris, how many spots do you have open? You don't know? 5,
I don't know.
10,
I haven't checked.
15,
I have opened a few here and there, but like I said, my goal is not to make it a big thing. I'd rather have a small, manageable community rather than thousands of people, which then ask me questions and I'm like not able to get to them, and people feel like, hey, I'm shortchanging you. I mean, it's not a lot of money either. It's like, a cup of coffee these days, a couple of cups of coffee now. Sorry, if you got in last year, you got the really special deal and you all got grandfathered in. Now all the new people, they're paying a little bit more, but that's what happens. It's like getting into a stock. You got to get into a stock at the growth phase when it's early.
You got to take some risk, and now that people took the risk on Chris, he's making big.
Well, they're making money too. I've spoken to some people, and like the amount of money that they're making.
That's what I mean. That's what I mean. It's like investing in a stock early. People are like, I don't know who this Chris guy is, but let's take the gamble. They gambled, they won, and now everybody's telling their friends. And,
you want to know
the bubble's going to pop, and your Patreon's going to zero. No, I'm just kidding.
Yeah, you want to know what I put a post. I actually put a free post on Palo Alto. And
right.
bro, that one is basically just killing it. Like my portfolio is rocking and rolling thanks to Palo Alto. And I know some people did the same thing where they bought Palo Alto when it dropped into like on Friday. And bro, it was awesome. Because then Nancy Pelosi came out and she started buying. And so it got the Nancy Pelosi bump. It was awesome. So it's been doing well.
Yeah.
Yeah.
Yeah, I need that Discord from Nancy. She needs
What
to.
did Amit say? Chris called me in the morning. He bought Palo Alto. Yeah, told him. That's what I
Apparently
do,
just got.
man.
Oh god. But yeah, if anybody's got that Nancy Pelosi Discord, hook us up. Much appreciated. I'll pay $1,000 for it. But cool, man.
What did
You're tuned in.
Imna
Sorry.
June said I bought a bunch of Palo Alto at 145. Congratulations. That was awesome. And then Zoe also commented the Nvidia partnership. Yeah, a lot of people didn't even see that Palo Alto actually partnered with Nvidia. Because the thing is, like with cybersecurity right now, you're gonna see a lot more attacks coming in because of AI. So I think AI right now, everyone is thinking, oh, yeah, this is the greatest thing. It makes everyone's life easier. It also makes our enemies' life easier, too. So you kind of need the hero to fight the villain. So I know people are going to be using AI for nefarious purposes. So you got to use AI to fight those people. So, yep.
Very good.
Oh, June's like, thanks, Chris. No problem, June. Thanks for being part of the crew.
Junebug, my guy. All right, guys. Well, this is after we end this. This is going to be going on to Cashflow Chronicles TV. So hopefully by tomorrow, have the ability to download it. Takes about 24 hours for it to show up. Sometimes it's 12, sometimes it's 24. This one's a little longer, so might be. But anyway, by tomorrow, this should be up and live. Hopefully with timestamps, but no guarantees. Chris, anything else that you want to say to the audience before we call it a night?
No, I just want to thank the Patreon people. My goal with Patreon initially was basically just a little bit of side money that I can use to basically pay for some subscriptions and memberships to some really good websites that have a lot of information behind paywalls. So one of the things is if you want good and great information, it's going to cost you. That's just how the world works right now. So a lot of these websites, like my investing in SLG was primarily because of a lot of the articles that were coming out in the Real Deal. The Real Deal charges, I think almost, I have to look at my bill, but like a few hundred, like I think it's like $300 or $400 a year to be subscribed to their publication. But the insights that these guys, let me share it with you guys real quick. So I'll give you an example of something that the Patreon money goes towards. Something like this. Damn it. I have to turn ad blocker off. I have to sign into my account. But basically this website pretty much gives you access to so much information with regards to commercial real estate. And the articles are written by people who are unbiased in terms of like generating ad revenue. They're purely run on a lot of like subscription revenues that cost them money. So they charge an arm and a leg for it. But all the inside workings of how the New York City real estate market are going, it's all on the Real Deal. Same thing with San Francisco and anything else. So if I'm investing in commercial real estate, like Brookfield, which is BPYPM, or SL Green, I'm using these websites to gain that insider knowledge that you normally wouldn't get access to. And like the Wall Street Journal and New York Times, they're not going to cover the niche like investing things, So that was the initial goal for the Patreon. And then as it grew, I realized that, hey, you know what? If I commit some time to actually doing the research and publishing the data and helping people, understand some of these things, and, it grows, it helps me from not having to work any extra overtime. And I think eventually I might even go part-time, where I'm only working part-time. And so any of the additional Patreon money is just going to supporting my day-to-day stuff. So, and I've got Sam Solid, who works in IT also, who helps me with a lot of the research on the SaaS side, because even though I have some IT experience, I'm not immersed in it nearly as much as he is. So one of the things I really want to do is I want to get more people who have industry experience in there. I mean, you with oil and natural gas, I can always reach out to you and talk to you. And it's such a great thing to have someone who works in the industry, because they can pretty much, debunk a lot of bullshit that's out there. Because there's a lot of bullshit. So if someone comes to you and says, hey, we can generate this much in oil cash flows, you'll be the first one to say, let's take a step back. And that's not something that you're going to get without knowing. So, getting people like that, connecting with people like that helps tremendously. So I think ultimately the Patreon is benefiting people, which is good. I'm not trying to raise prices on anyone. I'm not trying to make this a full-time job for me. Maybe it turned into a part-time job for me, but it's been working well. And I hope everyone is doing really, really well on the Patreon, which I know for a fact that some of you are absolutely killing it in the market, and I'm happy for you. And I hope you guys are learning how to do risk mitigation. That's the thing.
And I think a lot of people are asking the right questions, which I think is the best part. They're like, instead of just diving both feet in, like people are like, is this is already run up, say 30%? Is this still the right opportunity? And a lot of times when you're talking about the things that you do, Chris, it's a little bit more short term. Sometimes it might be a couple weeks, sometimes it might be a couple months, and then you gotta get out of it, right? Before the kind of tide turns on it. So a lot of people are asking the right questions to make sure that they don't get into something kind of late, right? So like a lot of people are talking about Celsius today. Is it still an opportunity with earnings and everything? And you're kind of like, a lot of the easy money's been made, and I think that's the right thing to say. I agree with you 100% there. Depending on even how you played it, maybe that's something we could touch a little bit on Thursday.
And if I don't know what I'm talking about, I'll just tell you. I was like, sorry, I don't know enough to speak about it. And by the way, I'm not selling an investing course. If you're looking for a course on how to become a professional investor, go. Plenty of people out there that can help you do that. I'm not a course guy. I'm literally like, hey, this is what I'm seeing. This is why I'm seeing it. This is what I'm doing with it. And you do what you have to as an individual investor. If I'm making a sound and logical argument, by all means, you can challenge it. You can go with it, whatever you want, and see where it takes you. And so some of the people, they've done very well. And I'm not saying that everything that I pick is going to be, or everything I talk about is going to pan out the same exact way. Like I know a lot of people that are underwater on PayPal, and I'm there with you. I'm underwater on PayPal too, but there's still market opportunity for PayPal.
The tide turns, right? Like you couldn't have forecasted everything that's going on with Google right now. Me looking at it from a long-term investor perspective says, okay, depending on how far it dips down, could be an opportunity. But for somebody that's looking at it from a spreads perspective, that has time dependency upon it, right? So it could be an opportunity to like cut it for now, wait for a better entry price, re-enter if things kind of seem like they're getting footing again, and then ride it versus dwindle for a month or two, because that month or two you're literally just going to be hemorrhaging cash due to theta decay, and it's not going to help anybody at that point. So but yeah, it's really important to kind of just understand where different perspectives come in and how people trade, and hopefully people take that away from it as well, because you have people that are in trades for sometimes less than an hour. Sometimes people like myself, are in trades for, hopefully my hopeful goal for some of these companies is decades. So anyway, just food for thought and understanding that.
Yep. All right, brother. I'll talk to you later.
Man.
Have a good
Talk
one.
to you later. Cheers all.
Bye.